Well, by most measures, the U.S. economy is going gangbusters, right? But investors still, of course, remain on edge, growing increasingly impatient with those trade talks between the U.S. and China. But National Economic Advisor Larry Kudlow tried to alleviate those concerns on Fox News last night, saying a deal is close.
If China doesn't live up to its agreement, we have the right not only to keep tariffs, but to raise tariffs, and they will not retaliate. Now, that's breakthrough stuff. We'll see if President Xi and the Politburo agrees to that. But right now, we are optimistic, and this is probably closer than we've ever been before.
Well, of course, there are other reasons to make investors nervous. Housing, of course, being one of them. New home sales eked out a tiny gain in 2018, reinforcing a, pretty weak market. Let's bring in Mitch Rochelle of PricewaterhouseCoopers and Courtney Dominguez of Payne Capital Management. Thank you both for getting up early with us this morning. Mitch, let me begin with you. This U.S.-China cloud has been hanging over these markets for quite some time. If indeed we can get this deal done, everyone's happy. Where does the market go from there? Can it go up another leg?
I think the market, Ash, is pausing right now. We saw a big run up. I think what happened in the fourth quarter is we were oversold. I think beginning with 2019, perhaps we were overbought. But right now, I think the market's in a little bit of a wait-and-see mode. We're getting close on a China deal, and I think if something happens and it looks like there's some teeth to it and it looks like there's some accountability in there, I think the market runs up because there's anticipation that there's growth ahead.
All right, Courtney, let's take the other side of the coin. What if it turns out like the just most recent summit with North Korea and the president walks away or China walks away? What happens to the markets then?
I think the markets are really pricing in right now the fact that a deal likely is going to happen right now. So I don't think that would be a good thing for the markets if a negotiation doesn't get figured out here. But in all likelihood, we're actually seeing that data is coming out that Chinese economy is slowing right now. So they need a deal just as much as we do. So, yes, I don't think that'd be great for the markets, but I think the chances of that happening are pretty unlikely right now.
Mitch, let's get back to the U.S. economy. At the end of last year, because we had a terrible December for the markets, but there was a talk of recession not that far away as we were heading into 2019. Now, some of the data has been weak, especially housing that's struggling to get some traction. But how do you take the pulse of the U.S. economy right now?
I think if you look at the GDP print that came out at the end of last week, I'm pretty bullish on the strength of the economy. I think what happened last year is they looked for any nugget that was negative and they sold into it, and that hysteria is not happening right now. But I think the consumer is very strong. You saw last week that people are saving record levels. Incomes are rising ahead of inflation. So I think on balance, and we could dig into housing, but on balance, I believe that the economy is very strong. The challenge is other economies around the world may not be as strong.
Yeah, that's a good point. Courtney, we've kind of heard from the Fed, and it's kind of a hands-off approach now. We've got some dovish comments from Jerome Powell, but we have a big jobs report coming up at the end of the week. What if we see wage growth really starting to pick up? Is there a concern that inflation, which hasn't reared its head up to now, but is there a concern that the Fed may have to act sooner than it wants to?
I mean, we're really in a strong economy right now. Inflation hasn't kicked in. I think until we see that happen, the Fed's not going to need to raise interest rates here. That being said, I really think we can probably sustain at least another one interest rate increase this year. But as of right now, they're really not saying that they're going to have to be doing that. And that's really adding to a lot of this optimism in this bullish economy. So I don't think we're necessarily nearing that in the near future.
All right. That's good news for the market. Mitch, finally to you. I'm told there's a ton of money on the sideline right now. People just a little hesitant to get in. Do you see that trend changing anytime soon?
And I think the wall, Ash, of money that's been on the sidelines is probably the same wall that's been there for quite a while. They're looking for something. And I would say, just going to what we talked about at the top of the segment, I think something on China would be the thing that could break some of that cash out in either direction.
All right, we'll see. Mitch Rochelle, Courtney Dominguez, thank you both for joining us this morning. Appreciate it.
Thank you.
Thank you.
Thank you.